The markets were easy to detect whether they were going to trade up or down because of the simple Doji rule, which is the prices will usually move in the direction how they open after a Doji. The lower open today gave us a couple relevant factors. One, they weren't breaking out into new territory. It was kind of a double top on the Dow. It came right back down to the T-line area. It was much more clear to see that happening in the NASDAQ with it trading lower. Not only trading lower today after the Doji of Friday, but trading significantly lower, well back below the T-line. Now there's one feature in today's trading that wasn't apparent or wasn't existing in previous trading days, which was that usually on a uptrending previous trading day, there may be one or two of the indexes down and one or two up. So it was an indication that everybody wasn't coming out of the market. It was more just showing the shifting of funds. However, today, the Dow, the NASDAQ, the S&P 500, the transportation index, and the Russell 2000 all sold off. That was a good indication that people were coming out of the market, not merely just taking profits. This also was able to illustrate the fact that when you're trading the candlestick patterns, such as the big fry pan bottom that we've started trading in CLF, Cleveland Cliffs, it still traded positive, even though the market's traded off, because that is a added benefit of following the candlestick patterns, because investor sentiment wasn't in this just because the trend was up. You could see how the whole pattern was a buildup of investor sentiment, so it wasn't going to disappear in one day just because the markets were getting soggy. And our recommendation was very simple on NVTA. We could see the J-hook pattern setting up based upon the big trading day of Friday. Now, it became much more clear. This whole chart allows you to analyze exactly what happens in human nature. Here's our best friend signal, a Doji off the 50 with a gap up. That's your best friend, and it implies there's going to be a strong uptrend until you started seeing profit taking. But notice the nature of the profit taking. Indecisive dojis, opening and closing at about the same levels each day. So that tells us that the selling wasn't very convincing. That's where you get ready for the next move up, and that big move on Friday made it very clear that now we had a J-hook pattern that told us that if it opened positive today, the probabilities were that this wave right here was going to be the same magnitude as this wave right here. But one of the major benefits of candlestick analysis is the visual aspects to it. This is where we can constantly say, observe the obvious. We shorted IQ on weakness today because look at all the pieces of evidence that tells you this downtrend is still in progress. There's a downtrending channel or resistance level. It keeps failing at the 50. On Friday, it did a bearish engulfing signal right here at the 50-day moving average. When it opened lower today, you had a couple pieces of logical evidence showing you the bears are back in control. First of all, it was confirming the bearish engulfing signal. Secondly, it gapped down below the T-line, kind of adding credibility to this downtrend. Now at least we have targets to look for. First target obviously was right here. Second target might be the bottom of this trend channel. So not only when the market was getting soggy are we able to find strong sell signals, but it allows us to get in positions well before everybody else starts selling off a position. That was also evident in our going short on Splunk, SPLK. Big evening star signal. Notice when it tried to come back up. Look how non-committal it was. Little hanging man, spinning top, shooting star, Doji. And again, what's our simple Doji rule? It needs to open in the direction of how they're going to move it. When they gapped this down a little bit through the T line, what was this indicating? We had a strong sell signal, indecisive buying, and now the beginning of the next strong sell signal, or the probabilities of being in a downward trend. So we were able to catch this good move with the next expectation that it could come all the way back down to test the 50-day moving average, which is also confirming filling this gap. Candlestick analysis is nothing more than the graphic depiction of what goes on in investor sentiment, and investor sentiment works the same way time after time, decade after decade, century after century. That'll be it. We'll see you in the chat rooms.